It's a pleasure to be here. As it was explained, I'm the Secretary for International Affairs from the Ministry of Finance of Brazil. As such, I am responsible to coordinate the G20 activities in Brazil in the finance minister's area. So what I can do here today is to tell you a little bit of what's going on these days of preparation for the summit tomorrow in this track. Because as you know, the G20 has two tracks. One is the finance track, and the other is what we call the Sherpa track. The Sherpa, as you know, is the guy who takes the people to the summit. So it's responsible for the conduction of the leaders to the summit of the G20. Of course, the whole focus of the G20 is on economic issues, but some are more linked to the finance ministries, and others are more broad, like trade or other issues. And then the Sherpas do that kind of discussion, and we do the more directly linked to the finance ministries. So in all those summits, you always have a lot of discussion on what's going on in the international economy. So last year, for instance, we were still very much under the impact of the European difficulties in terms of the debt crisis in Europe, the consequences of what happened in Greece, Portugal, Ireland, and at that point in time, the threat was coming to Spain and Italy. So a lot of concentration in the discussion last year was on building firewalls, mobilizing resources to the IMF, prepare the world if things do not move well and we have another emergency. This year, the situation in general is more positive in the sense that the latest data in terms of growth of developed, advanced countries are more positive. Still not good, but recuperating. And in the case of emerging economies, and I agree with you, I prefer to call them the developing economies, as we traditionally used to call them. In our case, growth has been slowing down in most of our countries, although we are still the greatest part of growth of the international economy at this moment, even with slower growth. Now, what happened lately, and that certainly is going to be one of the main issues of discussions, is that because the United States is recuperating, then there is this perspective of changing the monetary policy in the United States, and every time this happens, a lot of things happen in international financial markets. And what we have seen in the latest weeks is that investors tend to anticipate movements that are not yet even decided, but they tend to anticipate that. So long-term interest rates raised, and a lot of investors started pulling out money from developing countries. Although the picture there is quite mixed. In the case of Brazil, for instance, although we had a lot of movement in the exchange rate market, direct investment keeps flowing in, and investors also are keep investing in our market. As you know, we have an important current account deficit, therefore we need to complement that with resources that come in. But of course, the problem there is that harsh movements tend to happen when there is an anticipation of a change in the North American monetary policy that has generated a lot of trouble in a number of developing economies. So the discussion here is the kind of discussion you can have in the G20 in terms of coordination of monetary policy or fiscal policy is not one where you can be very precise in the sense that I'm going to do this next week and because you want I'm going to change my policy. What happens here, in fact, is a permanent discussion on those issues and a kind of peer pressure where each country tries to show the other what are the consequences of what we're doing. So basically the debate is attention United States, if you're going to change your policy, be careful, communicate clearly so that everybody can make its movement slowly, and at the same time allow us the space and the capacity to react to that. And I think that what has happened in the latest years is that developing economies have more space because they have had a more balanced economy. But also, in a way, the debate has moved a little bit more in the direction of allowing countries to have more space to counter international financial flow. So all the change, you cannot say that the IMF vision on that has changed completely, but it has changed to some extent in terms, for instance, of allowing, of recognizing that in the present state of the international monetary system, it's important that countries have space to impose some kind of controls to financial flows. Of course, this is the counterpart for the fact that North American monetary policy is not bound by any international control. So if they are not bound, you cannot expect other countries also to be limited in their reactions. And in that sense, the perception is that there is space and there are elements for developing economies to react to the change they are going to make. It's going to be messy, it's going to be volatile, but I think we have the elements to resist and not enter into a strong recessionary process ahead. A second issue that is being dealt with here, and I think it's important, is that we are going to have the approval of a program to discuss tax evasion and how to limit practices of tax evasion. As you know, a number of countries have very low taxation on companies. They do that to attract those companies. And the fact is that because companies are in different places, they can move their profits to where they feel they are going to be less taxed. They do a trade and they say, well, I'm selling this for an X amount of money, when in reality the value of that is completely different. And by doing that, they can allocate the profits where they are less taxed. So I think that in a way that has been for quite some time an important difference for Brazil in the discussions, for instance, in the OECD, because they used to be very much insisting that taxation should go basically to the home country of companies, and that you should have very liberal bilateral double taxation treaties. And what they are seeing now is that that is allowing companies to have a double non-taxation. Instead of being taxed twice, they are being taxed zero times. And I think that, of course, what generated that attention is the fiscal situation in developing economies. So, of course, we are, on our perspective, it's something that we are using that situation, and we feel that in that sense the agenda is moving in a direction which is positive for us, who are mainly capital receiving countries. So that's a good opportunity to rediscuss the way international taxation is done, and I think it's not going to be an easy discussion, because the basic structural difference remains. Developing countries are mostly exporters of capital. Developing economies, although more and more we also export capital invest abroad, we are still mainly importers of capital. So the structural differences are not going to change, the discussion is not going to be easy, but it's interesting that you have a new space for that discussion. The third point is the continuation of the financial reform agenda. And there it's an agenda which is difficult to transmit what is being done, because it sometimes tends to be very technical, but where a lot has been done. Not being naive at all, the fact is that this agenda, it was possible that this agenda moved because in the United States you had Dodd-Frank legislation that changed a lot the scenario in terms of financial regulation, and in a way a lot of elements which were incorporated there were transposed to the international level. They were then incorporated with some differences in the European community, and that allowed us to have in a number of areas some improvements and increases in financial regulation, harmonization at the international level. Now we are moving more and more to a phase of implementation of what has been decided. So we had the Basel III that increased capital standards for banks. We are now discussing the leverage ratio for banks. We discussed an even bigger level of capital for the too big to fail banks, which is those who have an internationally systemic importance. We have discussed ways to have more transparency in derivatives markets. So in general, the international regulation has moved more in the direction of, for instance, what we have in Brazil, which is a full registration of all the operations and an important central counterparty that has been generalized in terms of the recommendation, and now it's being implemented. This summit, we are approving a list of systemically important insurance companies, those insurance companies that have a global impact. Also in the area of shadow banking, which is the non-regulated, non-banking sector that also does financial intermediation, and we tended to be very lightly followed by regulators now. There are a number of recommendations being approved to ensure the follow-up and to avoid that when we get a stricter regulation on banks, then banks start moving money for the non-bank institutions. So we have also to regulate the non-bank area, and that is moving. Now the question now is whether all that which was agreed in international level is really going to be implemented. We have good movement in that direction. This year, a number of countries, including Brazil, approved Basel III legislation. So now it's a question of knowing whether that legislation really implements and is really being put in practice correctly. And that's going to happen in a number of areas through peer pressure process. It's interesting to know that in that area, what you have in terms of international practice is not having international treaties. Those are basically very flexible ways of agreeing recommendations, and then those recommendations have to be internalized, and there is a peer review process to ensure that this is internalized. But strictly speaking, no one has an obligation to incorporate Basel III, but of course then we tend to count also on the vigilance of the markets, because if a country is not seen as well regulated, it probably is going to have more difficulties. Finally, another area where the Russian presidency was discussed in very extent. Of course, there are a number of other smaller issues that I'm not going to touch, but the fourth area is the discussion on financing for long-term investment, because I think there was increasingly a perception that long-term investment is important for everybody. If you don't have the money cannot go in any direction. So one thing is how to multiply from what you have there. Again, it would be better if we could have more resources in that direction, but given that advanced economies have been very clear in that sense, we have to use what we have and then explore other instruments that, like the Bank of the Greeks or the South, or other ideas that are being put in place. And also, so to see what can be done to improve that area, both on an individual basis and also in a collective basis. So on this summit, we do not expect any groundbreaking decisions. A lot of it is continuation of the agenda. An important part of it, as always, is the discussion of the present situation. And I think the main messages, as I understand, on the financial side are those that I have mentioned.